All right. Warm greetings, my people, dear viewers of this channel, Trading Gold Wisdom. Thank you so very much for uh, taking your time to follow this analysis of our gold market, the gold spot US dollar. Thank you so very much. Now, uh, once again, today is Wednesday. New day, 6 a.m. East African time is when I'm recording this video. So thank you so very much. I appreciate you. As usual, we come in with our gold analysis and we look at how things are going, how the markets are going on, the forex market, of course, but specifically and in a specialization way. Um, Basically majorly in trading gold um, as keep building our portfolio capacity, skill, experience, and internalizing the markets, because one thing I've observed with the markets is they are very dynamic. They are very dynamic. So without further ado, let us start with our top-down analysis, where we begin looking at the market from the monthly time frame basis or overview. So January is the month we are in, and it uh, it it's a first month of the year. So I want us to look at what's happening to the gold market now. As we looked at yesterday, still the gold market has maintained a bullish trend from the opening price of roughly 43.27, a slight retracement on 43.13, 43.11 price. Okay, so the market maintained a very serious bullish move. As we speak now, the pressure price that the market reached at this particular morning was 44.99, and then a slight. So this is a live market now. This is a live candle. The markets are live now. It's already Asia session. Yes, so you can literally say gold is bullish. In fact, what we can say is any bearish site is a retracement or a discount for gold to buy more. All right, so we won't waste much time here. Already the monthly candlestick is bullish. That's already a sign that the market is consistently in an upward trend. The same, we come to the weekly. The weekly time frame is here. This is the new week candle. This is the new week candle, this one here, and we can be able to observe that the week we are in is already also bullish. Market opened very well here, very small retracement, then it pushed back. As I said, I think yesterday, is the market gold is looking at maybe moving towards the former highs or the week high level. We don't know, but the psychological price currently, a new price is 46, which is the psychological price. The former price high is 45.49, yeah, 48 up. Yes. So currently the price is at 44.78 and it has gone even close to 45. So this is a clear indication that gold is maintaining the bullish trend towards the upper prices, the former prices, and maybe also breakthrough to new prices. Remember, gold has showed a very serious trend of bullishness the whole of 2025. So we are looking at what the market is going to do in the season we are in, which is basically a new season. So we can say weekly bullish, monthly bullish because of this candle. Now let's mark a few things here. Let's maintain marking our week high price. Yes, and then also since we are in a new week, let me mark this as the week low, which the week we are in. The week we are in, let me mark it as the week low. Yes. Of course, the previous week low is here. Okay, we can mark it, but of course, historically, maybe the price might revisit. But for today's case, so we have the previous week high, we have the current week low. Preferably, we can say price 49.99 is the current week high, which is temporary because now this is a live market. Maybe it was a retracement. Okay. All right. So straight away we go to the daily time frame, and then we look at also what is happening there. Now on the daily time frame, I think if you watched my video yesterday, we observed a fair value gap, a daily fair value gap on the daily time frame, which the market has taken out already. Remember, I said the market moves to grab liquidity or hunt liquidity or balance the imbalance, and some of the imbalances you can always identify in the market are fair value gaps, which the market eventually fills them. So we can say that gold has, on the daily time frame, gold has already filled this fair value gap, this imbalance of this move that happened. The bearish fair value gap has been taken out. Okay. If you can also be observant, historically this was a bullish fair value gap. You see this one here, which the market came and balanced. So the balancing of imbalances and the hunting liquidity is the key major reason why the markets move the way they do. Now on the day time frame, we are looking at of course the bullish trend is maintained. Okay, the bullish trend is maintained by this candle for Monday and this candle for Tuesday. Now there is an indication of a bearish on a daily, which is also kind of a body candle open, a very small tiny wiki, but it's a body candle opening. Okay, which could be a slight reversal, but what can we mark on the daily time frame? Let us mark this fair value gap. Yes, let us mark this fair value. Today is Wednesday. Let me mark it for, yes, let me mark it. Friday is 9th. Yes, let me just mark it up to Friday. Now on the daily time frame, we have identified a fair value gap. Which fair value gap is this? This is a bullish fair value gap because the market left this gap between this candle, and this candle. Those of you who don't know what fair value gaps are, you can read more, or I will do a video teaching about fair value gaps. It's ICT SMC language, or what we call the smart money concept or inner circle trade concepts, which are also used. Those are theories and concepts, by the way, that traders use to describe a market analysis or technical analysis in that dispensation. So we have identified something to mark, which is a daily fair value gap. Okay, right, which is here. Now, fair value gaps also can act as support areas or resistance areas, liquidity areas, areas of imbalance that we have a feeling maybe the market might come and respect or tap into this fair value gap, or slightly even draw down, balance this imbalance here, then go through. So there is a weak candle here on the daily, which is also a liquidity zone. Could be some liquidity here, but we have a weak low. Yes, we have a weak low liquidity here, and we have another week low. So this is current week low, and this is previous week low. Remember, highs and lows of either week or a day or 4 hour can be good zones of liquidity. So the question is, will gold push back to the former highs, or this candle will persist to press down because already it's showing a bearish indication, and this is a daily candle. Now, daily candlesticks always have a lot of significance when it comes to market reaction and response. Traders react a lot or respond a lot to daily candlesticks. So we can say gold is bearish today or this morning, because the day is just beginning. It is 6 a.m. in the morning, East African time. Still very early to judge. But what we are seeing here is a bearish candle, which is showing indication that there is a slight pullback, but you never know. Something might happen still, and it causes. We shall also look at the other factors called the fundamental analysis. All right. So on the daily time frame, I have marked a fair value gap. We have the highs, the lows, and the lows. Of course, these are another highs. Okay, it's a previous day and current day. Okay, so can I mark it? I don't want to mark too many things, by the way, but just for the sake of learning, yes. So we can call this, okay, this is a previous day high. Today, this is a current day high. Okay, so let's go one day. Let's go to the 4-hour time frame. Let's go to the 4-hour time frame. So what I can do is, let me just try to press this a little bit. Reduce the candle sizes. Yes. So if we can text, we say DFVG. So that DFVG is daily fair value gap. Okay. All right. Now the daily fair value gap is showing us a slight point of support here. Let's take that. So what are we looking for on 4-hour? Remember, we have already marked a key area on a 4-hour time frame, on the day time frame. Now, this gap, the market open gap, we marked it in yesterday's video. If you can check it on my channel. Let me change this color to black. Yes. Why do I have attention on this gap? Because the market will come back to fill this gap. This is the weak opening gap. This is a weak opening gap, and you know the weekend had events where the America, you know, invaded Venezuela and captured their leader. So gold reacted to that event by opening this gap as well. And also, if you look at this move, gold has been bullish the whole of this week so far up to date, when the market has showed a bearish 4-hour candlestick which has already ended, and then we are in the new 4-hour candlestick. So what is the implication here? The implication here is uh, in the technical analysis, in maybe theories of concepts of trading. What does this candle represent? Okay, does it represent a break of structure on 4-hour, a discount candle that smart money comes in to buy more gold on a lower price to push the market further to the higher highs of the previous highs? I don't know. Will the market trace back? Is this, is it an order block on a 4-hour? I don't know. So currently as we speak, gold is bullish on 4-hour. As we can see, came, tested this candle wiki, then pushed back. So as we speak now, the market price is 44.77.76. So how will the market react? Will it react back to this fair value gap? This week has a lot of news coming up. I'm going to look at the fundamentals as we finish. But let's proceed with our technical analysis as we mark out key zones. So on 4-hour, I've marked this gap, the market opening gap. The daily fair value gap we saw yesterday has been taken out. Gold has tapped into this order block. If I mark this zone, let's try to mark this zone. If I mark this zone here, okay, if I mark this zone, all right, you see, if I mark this zone, let me try to reduce on okay, yeah, if I mark this zone as a zone of resistance or pressure area, let me remove this. If we mark this as a 4-hour order block and gold has come into this zone, formed a bearish engulfing candle which engulfed this and these two candles, you see. So can we say this was the pressure level for gold to press back down? Then maybe further drop might happen during the day in response to fundamentals that will be happening today as well, as we'll check on that. Okay, so key zones to mark on 4-hour, I have marked this zone as the pressure zone or resistance zone. We have a daily fair value gap here. We have the weak market open gap which was formed. Do we have a fair value gap on 4-hour? Let's see. This no fair value gap here, no fair value gap here, blah blah. Okay, we could say maybe this is a fair value gap from here, this candle and this candle. Yeah, there's an imbalance here, but we'll see what the market reacts to it. Currently, this is the zone where the market is. Alright, so let's go to 1 hour. Top-down analysis helps you to scan through the market and see the events of the happenings of the market, just to have also an overview of how the market is behaving. Let's squeeze in a little bit here. I like this kind of view on the market. Yeah, let's push it like this. Yeah, so we have marked this. Let's mark this as a 4-hour OB. Yeah, the 4-hour order block, bearish to say. The daily fair value gap, week high, previous week low, previous day low, previous week low, previous day low. Liquidity is here. Yeah, previous day low liquidity, previous day low liquidity is here. It's here. Tuesday 3 a.m. in the morning, Asia low. It's not been taken out. Monday low, New York low has not been taken out, and Monday Asia low has not been taken out, and last week low, New York Friday 2nd of January has not been taken out. So what we can see on the sell side liquidity is we have London low liquidity, we have Asia low liquidity, we have New York low liquidity, yes, and then we have Asia low liquidity here and New York low liquidity. So this is previous week low. Is it? Previous week low is this one here. Okay, let me get my cycle. Let me mark this zone. 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 Good. So this sell side liquidity, or the area of imbalance, the area of imbalance, the areas of imbalance and areas with, you see, okay, let's mark this, or let's just mark this one up to here. I think you can see all this. So basically I can say at this level, to me, I can say gold is under overbought. If it is to break out of this, like yesterday analysis, I spoke about this imbalance. I think you can see now, gold has taken out this order block, 1 hour order block. It has also come, in fact, if you look at this, there's a fair value gap here on 1 hour, this one here, which I can say gold, yes, gold is in this 1 hour fair value gap, but also 4 hour order block. So 4 hour is bigger than 1 hour, but basically this is what we can say. Now, what is this? These 3 red candles, 1, 2, 3. Is it a change of character on 1 hour? that the market is changing direction. Change of character is when the market changes the trend. The trend change of character is change in the trend. Break of structure is retracement, market continuing in that particular direction. Like we can say this was a break of structure on 1 hour. The market continued to push up. Break of structure, market continued the bullish trend. Break of structure, market continued break and the bullish trend. So the question is this a change of character on 1 hour? So if this is a change of character on 1 hour, then gold is going to dump. Gold is going to dump. So if this is a change of character, if the market has changed direction, then this can be a bearish change of character. Then the next 1 hour candle might see a bearish drop. We don't know, but let's keep observing the market and see. So what is okay? My bias for today in this market is bearish. I'm looking for some confirmations to sell some gold from this zone. If you had entered some sales here on 97, 95, 90, would be some good floating profit, like 200 points, even close to 300 by the way, even. Yeah, yes. Okay, so what am I looking at is if there can be a drop trend back. So the wick is bullish. Will it retrace back and dump? Chances are high because the market has reached this price level and has been rejected. The pressure sell here has showed indication. So we have 1, 2, 3 bearish candlesticks. Will it retest here, form a double top structure, and then push down with some retests? Let's see. So finally, as we finalize our analysis, let us go to the 15-minute time frame, which is usually the key major entry. As I said, personally, I always look at the 15 time frame as my entry time frame. All right, now 15 minutes is showing us this. Okay, allow me reduce these liquidity points. Liquidity points, we reduce them a bit. Yes, good. Okay, now for our order block is acting as the resistance on 15 minute. Market has dropped significantly. There is a 15 minute fair value gap here. This one here, very tiny, but just mark it shortly here. This yeah, 15 minute fair value gap here. Okay, just take it out. All right, so we can say gold is bearish with a slight break of structure. If the trend has changed to bearish, then this is a retracement. We pull back up, collect some orders here, take out some stop losses, pick some sell limit orders, then continue dropping. So we can say this, or we can see some rejection here. Some sellers are pushing back this market. As you can see, this weak is a zone of weakness. Okay, then we expect the market to drop further, come into this daily fair value gap, and then maybe if the pressure is higher, it will come and collect orders, hunt this liquidity that is seated on the week low, but yes, the week low is here on this on the market opening gap. All right, so let's see how things go. Let me put an alert here. Just put an alert here at 50. So the support level, we have a support level at 44. We also have a support level at 44.20 here in this fair value gap, the daily one. All right, so guys, I think that marks the end of our Wednesday gold market outlook. So we leave the market to express itself as far as today's data is concerned. So fundamentally, Wednesday 7th, gold is the US dollar news. Basically, we at 6 p.m. East African time, we have the ISM services news. Okay, the Institution for Supply Management Purchasing Managers Index PMI news, and also we have the George job openings news. By the way, sorry, this is Wednesday. Yes, sorry, at 4:15 we have the ADP non-farm employment, the ADP non-farm automatic data processing INCO news at 4:15, and non-farm employment ADP, the employment data from farms that are not related to farming or agriculture, other than. Then we have the jobs opening news, the job opening and labor turnover survey, the news coming up also at 6 p.m. East African time. So 4 p.m., 4:15, there will be some volatility, and then 6 p.m. also there will be some serious volatility. So trade with caution, and thank you so very much. God bless you. Peace. Like, share, subscribe, learn something, contact me in case of anything. I've put in the description there is a link for the broker I use. If you want to join the trading community, you can open your account, contact me so that we can work together. So thank you so much. God bless you. Enjoy.